Hello and welcome to a new webinar series. It's 25th of August 2018 Saturday, and I'm your friend Shumay Goswami on behalf of Proficient. So let's start today's session, and let us begin with the weekly outlook of the dollar index first, and then we will come to equity. This is the daily chart of dollar index, and you can see that dollar index has given up some of its strength over the past 1 week, but the trend is still pretty strong, uptrend, and it is still trading above its important moving averages. But there has been some selling pressure lately, and some weakness is seen, especially in the past 3 or 4 days. 94 95 is the current price, and if it goes below 94, then we can expect the weakness to be retracted, with weakness to be continued for few more sessions. But until that happens, the overall bullish structure of dollar index still retains, and there is a high probability that 94 region, where a substantial support has been created, is unlikely to be broken. Now, if we really give a short-term weakness outlook in dollar index, let us say if we expect dollar index to decline over the next 5 or 6 trading sessions, then what is the likely situation that can happen in important commodities? Let us first open the chart of gold. This is the daily chart of gold, and yesterday there was a strong short recovery, we can say, not significant bullish movement, but nevertheless gold rose some $20 per ounce, and it is now trading at $1,213 per ounce. So the thing is, this is likely to happen if there is weakness in dollar index. If dollar index weakens over the next few sessions, that is, if dollar index breaks 95 and 94.5 as well, then since these commodities are denominated in dollar terms, naturally they will see some strength. But this strength, particularly in precious yellow metals like gold, silver, all those things, like these short-term strength does not mean anything, at least as yet, because the trend is still pretty weak. It is a primary downtrend for gold, and prices are hovering below important moving averages. We can clearly see the series of lower tops. So even if that happens, that if dollar index comes down and gold prices or silver prices rises, then our expectation is that it will be a short-term phenomenon, and it will be more of a sell-on rise opportunity rather than buying opportunity. And this view remains valid as long as gold stays below its 50-day mark, which is 1233 or 1235 approximately, that much dollar per ounce. So any rise below that region will be a selling opportunity in dollar index, in gold, and provided dollar index keeps retracing, right? Given that opinion, what is likely to happen in crude oil? Now let us open the chart of crude oil. Here we go. Mm, this is the daily chart of crude oil, and last week 200-day moving average was challenged, but it was not broken. Uh, it showed some support, it showed some demand out there at 64.4 region, that much of dollar per barrel. And in fact, crude has created a triple bottom support area at 64.7 region. That is exactly where 200-day moving average is residing right now. And yesterday, significant movement occurred, and it challenged the 50-day moving average. Right after some 15 days of staying below the 50-day moving average, now it is trying to challenge the overhang resistance of 50-day moving average, which is at around the current price, $68.8 per barrel region. So given that view, we can see that crude oil is in a primary uptrend. First of all, it has created a support area. It is generally expected that in a primary uptrend, supports are more likely to hold than the resistance. Resistance are more likely to give in. So we can reasonably expect crude oil prices to rise even higher. And if it successfully manages to go beyond 69.5 or $69.8 per barrel region, then chances are high that the primary uptrend after a brief sabbatical will likely resume. And in that case, higher prices are possible. And we can also see that an intermediate downtrend line that we can draw from July top and joining the August top so far, that is the second week of August. If we can imagine a downward trending line, then that short-term downward trend line has also been broken. So there is possibility that crude oil will resume its primary uptrend, provided it stays sufficiently above the 200-day moving average, which is at around $65 per barrel region. And for the next week, $66 and $67, these are important marks for crude oil. If it successfully stays above these regions, then probably the odds are higher that the primary uptrend will resume in crude oil. Back home in our MCX term, crude oil yesterday closed at around 4,800 or 4,810 per barrel region. Overall stop loss will be 4740 region, and with that stop loss we can take a long position in crude oil. Okay, so these were the view in dollar index and the important commodities. Now let us see what is happening in the equity markets. First, let us start with the US equity market. Here we go. This is the this is the daily chart of S&P 500. As you can see, nothing out of the box is happening, right? Prices are continuously making higher bottoms, and all these bottoms are actually buying opportunities. All these weaknesses are buying opportunities. The slope of the moving averages are extremely strong, and S&P and Dow both are trading at their lifetime high, so that is remarkable. So the primary uptrend is pretty strong. Given various kinds of uncertainties over the global economy that an impending rate hike threat from US FDA, an impending trade war between US and China, and some political uncertainties over the office of president in US. Amid all these uncertainties, actually the equity market is continuing to outperform. And this is precisely what happens in most primary bull markets. These rallies are rallies of disbelief. People cannot justify why prices are rising. And in order to find the justification, they keep missing the movements. They try to find out the valuation and they find stocks to be overvalued, and they tend not to buy the overvalued stocks. And in the process, they end up missing the whole movement. So that is how it is better to stay with the trend, not to try to justify the prices. We know prices are overstretched. We know prices are overbought, and any pullback might happen, might come anytime, right? But that is the case for past several months, past many months, and without any concern of ours, prices have been making higher tops and higher bottoms, which is the trademark of any primary uptrend. So we have to stay with the trend. We have to trade in the direction of the trend. We have to trade long, and all weaknesses have to be bought. So yesterday, another strong upward movement occurred in S&P, where it rose nearly 0.6% and closed at lifetime high 2874 is the current price. And previous week's low was at 2800 region, where that is the previous to previous week's low, where the 50-day moving average is also residing. So that is our last make or break zone. That is our latest break or make zone. As long as prices stay above this region, we do not think that there is any threat to the primary uptrend. So that is the overall outlook in US equity markets, the global equity markets. Whatever we are seeing is the large cap index. So if that is the case overseas, now let us come back to our own domestic market. Let us first start with the equity index, which is the Nifty 50. It is also the large cap index. And for the past 2 or 3 weeks, we have seen prices to remain stagnant, and it has not been doing anything. Prices have been making a higher open, but over the session, the higher opens have been forfeited, and some minor sell-off occurred. And in the midst of all this, prices, just like its US peer, prices have been continuously making higher bottoms. So, and that is what it counts, right? Right in the chart of Nifty as well, you can see the series of higher bottoms, and these higher bottoms are creating ever increasing support regions. Nifty yesterday's closing was not at a live high on daily basis, but definitely another live high on weekly closing basis. So there is nothing new that is happening except for the fact that prices are overstretched, and that happens in the bull market. That is nothing new, and we just have to give a stop loss around the previous bottom and take a buy position. In fact, we are holding several long positions in various stocks, including Nifty. And we do not know what is happening, what is most likely to happen next. We do not know. Nobody knows that. We can only manage the risk, right? We can see that since it is an upward trending market, we have to define the stop loss and we have to take the risk. And this is exactly what we have been doing for several months now. Prices, it is possible that prices may retrace anywhere, anytime. we are ready for that. We will just use our stop loss and exit, right? But as long as the trend is continuing upward, our only job is to participate in the uptrend and trade in the direction of the uptrend. So as of now, whatever we can see from the daily chart of Nifty is that the previous to previous week's low, that is on 13th of August, it made another bottom at 11,355 region on closing basis, and after that, in the previous 8 sessions, that is in the previous 2 weeks, no significant bottom has been made. So that 11,350 region remains our last bottom of reference. As long as Nifty stays above that, the primary, intermediate, and secondary uptrends are expected to continue. So that is the view. That is our outlook in Nifty for the next few trading sessions. But having said that, we are also reiterating the fact that the market has been exceptionally narrow ranged in terms of breadth. Very recently, we have seen some kind of participation, as to say the overall market is concerned. Some kind of joy returning to the market in terms of mid caps and small caps. There's just a little bit of they're just participating a bit, right? But nothing much has happened as yet. The broader market is still outperforming a lot, and action is being seen in a very specific counters, and you have to be in those specific outperforming pockets of the market where action is all being seen. And if you are not in those particular stocks, say some only 15 or 20 stocks in Nifty is doing whatever it is doing for the index to lift up, right? And some and the bigger atmosphere, the bigger universe of stocks is actually not performing. So some 30 stocks is not performing in Nifty, and some 20 stocks is pushing Nifty higher. So if you are not there in those 20 or 10 most outperforming stocks, then you are actually missing the action. This is basically a top-down approach where we are identifying the sectors first, and then we will identify the stocks. As of now, many a times we have told earlier that the FMCG sector is outperforming, and sometimes it is Dabur, sometimes it is ITC, sometimes it is Hindustan Unilever, even sometimes it is Jubilant Foodworks, and these stocks are actually lifting the mood of FMCG index, and as a result, it is also pushing Nifty upward. So yeah, likes of ITC that we had mentioned earlier, as you can see, the stock is poised perfectly well. I had also shown this stock in many of our several webinars. The breakout gaps you can see here, that is on the 3rd week of July or in the 4th week of July. The breakout gaps tell us clearly that it is the beginning of a new uptrend. More of steam is left in the movement, and although did not happen anything of significance in ITC this week, but this stock continues to be an outperformer, and the trend continues to be in force, and anytime the stock may see even higher prices, and the last top was at 350. That was the live high for ITC. and if the uptrend continues, currently it is trading at 310, then there is a strong possibility that the life high of 350 will be taken out and even surpassed. So ITC in the FMCG stocks remains in our radar. Hindustan Unilever continues to be an outperformer. Here, that this is the chart of Hindustan Unilever. As you can see, the series of higher bottoms as that is seen from the zigzag function, the red zigzag function that we have plotted here. It is a 3% filter. It is a 2% filter I have done here. Let us turn it a 3% filter, and as you can see, the zigzag function is actually filtering all the movement that is less than 3% from top to bottom as noise, right? So our primary objective when we are looking at any chart is to filter out the noise and to look at the trend properly. And the daily rise and falls actually makes it difficult for us to look at the trend. So that is why there are several techniques in statistical and technical analysis process, and the zigzag function is just one of them. I am using here a 3% zigzag function, which means that any top to bottom movement which is less than 3% is not being shown as a significant movement. And what I am achieving with this, I'm trying to find the bottoms, right? I'm trying to find the tops and bottoms. And as we can see from this chart, that the bottoms are successively higher, the tops are successively higher, and that is what counting. That is what is counting for any uptrend to continue. And also there is an ascending triangle breakout. So environment is pretty clear. Environment is pretty bullish. The stock itself is trading at life high, almost exactly at life high, not above the previous week's closing. But yeah, this is another outperforming stock in FMCG. Not to mention Dabur, and this is a significantly outperforming stock in the past 1 month or in the past 5 weeks. It has given some 25% returns. Tremendous show from a conservative stock like Dabur, from a conservative sector like FMCG. So all these stocks are likely to outperform going forward. FMCG sector overall is likely to outperform as well. The second most important sector that catches our fancy, and not recently but for a long time, is the IT sector, right? And in that IT sector, what is most important is TCS. This is the daily chart of TCS, and there is nothing new to say anything about this stock. The uptrend is pretty secular. The stock has been making newer highs, that is newer lifetime highs, almost in a regular interval, and pretty conservative stock. Business model is pretty stable, and the market is rewarding this stock for a long period of time, and this uptrend has a very long history. As you can see, 2000, this chart is a weekly chart from 2017, and as you can see, over the past nearly 2 years, the stock has been making series of higher bottoms on even weekly time frame, and that is the nature of any upward trending stock. We have to create a core position in such stocks. That is, we have to buy some initial position, and then as prices move higher or as prices move lower, we have to add to that position around our core position, and that will give us a significant position in any such upward trending stock, and that will generate a big return over the longer term. So in the IT sector, TCS is our most preferred stock. And last but not the least, we can also see the pharma stocks. The pharma stocks were in some protracted downward trend for a very long time. But recently, we have seen, not recently, even some pharma stocks have made some significant bottom formation, and now they are rising. And our top pick in this sector is GSK Pharma, also known as the GlaxoSmithKline Pharma. Yeah, here it is. Just to look at the chart, the stock actually breached the 200-day moving average in early May or late May at around 2500 region, and ever since then prices have been going higher and higher and higher, right? And this stock is actually an outperformer in the pharma sector. But prior to that, you can see the protracted downtrend. This downtrend ran for almost 2 years, brought the stock on the doorsteps of 2000, but 2000 was not violated. Then the selling pressure subsided, and 200-day moving average was taken out in style. After 2 or 3 attempts, the 200-day moving averages was taken out, and right now the stock is marching ahead with a strong vengeance, right? As you can see, the momentum is pretty strong, and this high becomes the nearest target, this high at around 3800. So there is a possibility of 10% appreciation from here, 3800, or even higher. Some 15% appreciation possibility is here. And as of now, you can keep a stop loss at around 3100. So GSK Pharma or GlaxoSmithKline Pharma remains one of our top performers in this sector. And also we like Ajanta Pharma. This is the chart of Ajanta Pharma. Why we are liking it, I'm telling you. This was the consolidation phase. This was the consolidation phase. So after the two-year long downtrend, or even bigger, the prices spent some time in the consolidation zone, in the doorstep of 1000, and right now it is on the verge of resuming the primary uptrend. So Ajanta Pharma is another stock from the pharmaceutical sector that we are bullish over. So first is our FMCG sector, then IT, then the pharma stocks, and not to forget about the metal stocks. Now, why metal? Metal stocks as such are not doing as good as the other sectors, but some of these metal stocks, especially I'd like to draw your attention to JSW Steel. This is a star performer in this sector. And if I show you the long-term trend, long-term chart, you can see for yourself why I'm telling this. This is the longer-term chart. This is showing a strong primary uptrend, and this chart clearly tells why this particular stock is better to trade from the long side as compared to the stalwarts like Tata Steel, like Steel Authority of India, that is SAIL, and all other stocks. Actually, all these stocks are not doing as well. Let us see the chart of Tata Steel, how Tata Steel have been faring over a significant time. It has not done as good, right? There is some uptrend on the very long-term chart, but in the past 1 year there has been nothing has occurred in this. Sorry, this is the Tata. Yeah, Tata Steel is actually in a significant downtrend, right? Trading below the 200-day moving average and making significant lower tops. So there must be some reason why Tata Steel is doing this, and there must be some reason why JSW Steel is doing this, right? And in contrast to the chart of Tata Steel, this is what JSW Steel has been doing. So many times I have said it earlier, and I am repeating it here, that in the metal sector, there are other stalwarts like Tata Steel, like Vedanta, like Nalco, Hindalco, SAIL, but the best stock in this sector, as far as outperformance is considered, is JSW Steel. And in fact, we have some position in JSW Steel as well, long-term position. So this is the best stock to trade in this metal sector. And yesterday, a significant movement occurred. The stock actually broke out of its 3-month-old consolidation zone, and the stock closed at yet another lifetime high of some 354 region, and that is significant. Prices are trading above the important moving averages of 50 and 200-day. The slope of the 200-day is higher, that is upward. So these are the acid tests of uptrend, and with all this, the stock actually closed above its 2-month or 3-month consolidation phase and closed at another lifetime high. So there is a strong possibility that JSW Steel will continue its upward movement, and we have to trade this stock from the long side. Overall stop loss, you have to keep the overall stop loss around here at around 325 region. That is where the 50-day moving average is also holding. So you have to keep a stop loss of some 30 points, and you have to trade this stock for a longer term horizon. Best approach is to create a core position and then add or build over that position as prices keep on going higher or keep on going lower. You have to trade this stock for the longer term perspective. So these were the sectors and these were the stocks that we choose for you for next week or for next several trading sessions. These we believe are more likely to outperform the overall market, and that will happen if Nifty gives us a bullish environment or neutral environment. In a bullish or neutral environment, these stocks are more likely to outperform. But in case Nifty sees some sell-off, right, and a significant top has been made in Nifty at around 3600 region, then there are some stocks we see those stocks are in protracted downtrend, and these stocks will see even stronger selling pressure, right? The oil marketing stocks, the likes of IOC, the likes of Hindustan Petroleum, BPCL, these stocks are actually in a downtrend. So if Nifty sees some sell-off, Nifty, if there is some overall weakness going forward in Nifty, then we will also try to trade these stocks from the short side. This is Indian Oil. As you can see, the stock is trading at a new 50-day low. The stock is also trading significantly below its important moving averages of 200-day. Here it is. So the downtrend here is pretty clear, and any pullback, we need some pullback for this stock to sell, because look at the stochastic in my upper pen. The stochastic is extremely oversold. So we would prefer to see the stochastic to go higher, at least above 50 mark. Right now it is quoting at around 12 mark, which is extremely oversold. If that happens, then prices will also likely to rise at around 164 region, or 162 to 165 region, and in that case that will give us a better shorting opportunity in Indian Oil, in Bharat Petroleum, that is in BPCL. So these stocks have some fundamental problems, and the chart is showing that. The chart is showing there is extreme distress. They have depreciated hugely from their lifetime high, and more weakness is likely to come, and the downtrend is likely to continue further, because there is no advanced signal of any sort of resumption of uptrend, or exhaustion of the downtrend. So we can say that the downtrend is likely to continue even further, but some pullback will be excellent opportunities to sell short. So these were the stocks to trade from the short side in case Nifty sees some sell-off, and that will happen if Nifty breaches the 11,330 region sometimes next week or in near future. So that was our overall opinion of the market. Overall, we are seeing the upward trend to continue, and the stock specific action is likely to continue, and there are very narrow region where action is being seen. The important sectors are FMCG sector, IT sector, metal sector, and to some extent pharma sector. These sectors are most likely to outperform if Nifty gives us a neutral environment or a bullish environment. And if 11,330 region is broken downward, then chances are high that we will see some pullback of the overall uptrend. But that will not threaten the primary bull market that we are in right now. So that will only be a short-term pause. We may have to exit our long positions with the intention of re-entering at lower prices. So if that happens, then the oil marketing stocks are even more likely to come down, and we will then trade the oil stocks from the short side, and we will then have to come out of our long position in case that happens. So that was our overall view. I hope you enjoyed this session. If you have any query, you can post that in our YouTube channel. And thank you. Let's meet up next week. Thank you. Bye.